Welcome to my YouTube channel Indian Bull vs Bear. This video is part of the series The Final Missing Piece. In this, I'll share my analysis of historical trends of the construction sector. Please read the entire disclaimer carefully. The construction sector in India is a key driver of economic growth, contributing around 8 to 9% to the country's GDP. It comprises of two major segments, real estate and infrastructure. The government supports this sector with policies like PMAY, Smart City Mission, and Bharatmala Pariyojana, which boost construction activities. Gati Shakti plan aims to improve infrastructure connectivity. The growth drivers for the sector includes urbanization and rising demand, infrastructure investments, FDI, and REIT. The sector faces few challenges, which includes high debt and liquidity issues, delays in project execution, rising input costs, funding constraints, and regulatory and legal issues. So now in order to identify a trend in this sector, I have analyzed the share price movements of last 10 years of top 10 companies of this sector. All the top 10 companies of this sector are small cap companies. I will present my findings in form of 5 graphs. Let's start. This is the first graph, which is the yearly returns graph. This shows the yearly and cumulative returns in percentage. This is a line graph. This blue line over here, this shows the yearly returns in percentage, and this orange line shows the cumulative yearly returns in percentage. So 2015 was a very good year for the sector, uh, with the returns of 33.16%. But 2016 was a bad year for the sector as the sector gave negative returns of minus 9.68%. 2017 was a massive year for this sector. As you can see, the sector has given returns of 145.42% in a single year in 2017. But then came 2018, and again the sector gave negative returns. In 2019 as well, the situation worsens and the sector again gave negative returns. The situation improved considerably in 2020, and the sector gave positive returns of 37.06%. In 2021, the situation improved further, and the sector gave very good returns of 95.79%. In 2022, the sector gave good returns of 20.33%. In 2023, the sector gave massive returns of 80.18%. And in 2024, the sector gave returns of 21.66, which I think are good returns. So if you see from 2015 till 2019, this sector was not performing good. But since 2020, this sector has given dramatic results, very good results. The cumulative return of the last 10 years is 906%, which is more than 10x in last 10 years. Let's move on to the next graph. This is the yearly swing graph, which shows the number of positive and negative returns months. So this green bar over here shows the number of months with positive returns, and the red bars shows the number of months with negative returns. So in 2015, 8 months gave positive returns. In 2016, 7 months gave positive returns. In 2017, 9 out of 12 months gave positive returns. In 2018, only 5 months gave positive returns. In 2019, 6. In 2020, 7. In 2021, 8. In 2022, 9. In 2023, again 9. And in 2024, 7 months gave positive returns. So you can see clearly good 5 years for this sector. Let's put both of these graphs together and see uh, if we can find some takeaway from those. So here are the two graphs. Let's see. So the cumulative return is 906.43%, as we have identified earlier as well. So this is more than 10x returns in last 10 years. CAGR 25.97, almost 26% of CAGR. Very, very good CAGR for any sector. 26% CAGR over last 10 years. Negative yearly return 3. So now this is a concerning takeaway from the sector. Though this sector has given massive cumulative returns, massive CAGR in last 10 years, 3 out of last 10 years have given net negative yearly return. So this sector is not for the faint-hearted. This sector is only for long-term investors. The best year for this sector in the last 10 year is 2017. So 2017, we have seen this was a very good year. 145.42% return in 2017. Massive returns. Worst year 2018, negative 38.77% returns. You can see over here 7 months gave negative returns, and in the best year 9 months gave positive returns. Positive to negative year ratio is 2.33 is to 1, which means 2.33 years positive years against one negative year, which is okay, not too good, I would say. Let's move on to the next graph, which is the monthly returns graph. So this graph is basically comprises of 12 smaller graphs, one graph each for every month of the year. And these green bars shows the positive returns, whereas these red bars shows the negative returns. So for January month, in last 10 years, this sector gave 5 positive and 5 negative returns. So an average month for this sector. Same is for February, 5 positive, 5 negative. Same is for March, 5 positive, 5 negative. So first quarter or first 3 months of the year, I think they are the average months for the sector. Then comes April, and you can see only two negative returns in last 10 years. So April seems to be a very good month for this sector. May, only four positive and six negative returns. That means below average month for this sector. June, six positive. That means above average. July, nine positive and only one negative return in last 10 years. Very, very good month for this sector. August, six positive, four negative. That means above average. September, five positive, five negative, average month. October, seven positive, three negative. So a good month for this sector. Same is the case with November, seven positive and three negative. So a good month for this sector. And then December, eight positive and only two negative. So a very good month for this sector. Let's move on to the next graph, and this is the mean monthly returns graph. And in this graph, I have taken the average of last 10-year returns across every month. So few points very clear. February, March, and May are not good months for this year based on last 10 years historical data. But there are few which have given very good returns. For example, June, 7.42% return. July, 5.6%. April, 5.5%. December, 5.16%. So there are very uh, good months as well, but there are 3 months which are not good for this sector. Let's see the final graph, which is the monthly swing graph. And in this graph, we can see that January, February, and March all have given five positive returns in last 10 years. April has given eight positive returns in last 10 years. May only four. June 6. July is a very good month for this sector with 9 positive returns. August 6th, 5 only. September only 5. October and November 7 positive returns, and December 8 positive returns. So good month for this sector. Now let's put this one and the previous graph together and try to identify some takeaways. So here are both of these graphs together. Let's see. So the first is cheaper months. So February, March, and May. It's quite clear. February, March, and May are the cheaper months. You can see here as well. Only five positive, five negative, five positive, five negative, and only four positive and six negative returns in last 10 years in these months. Costlier months: April, June, July, and December. Clearly, April, June, July, December. All these months are very good. If you see here, April 8 positive, June 6 positive, July 9 positive, December 8 positive. So it's quite clear over here. And the final piece of information is the positive to negative month ratio is 1.67 is to 1. So basically 1.67 positive months against every one negative month. So I have presented all graphs in front of you. I have shared my deductions or my takeaways based on these graphs. You can study these graphs on your own. You can identify some other trends, some other takeaways for you. So I hope this video helps you to identify the trends on your own so that you can take the investment decisions carefully and independently. This is all from my side in this video. Thank you for watching it. Please subscribe to the channel, like and comment. I'll be back soon with another video. Goodbye for now.